Comment below, do you care more about the vision of something or do you care about the ROI and the numbers?
Yeah.
If you're looking at real estate, what do you care about? Clearly the numbers. Thank you. Yeah, Team Chris. All right, guys, welcome back. So we have more of an elaborate setup than we've ever had before. Will brought out all the nice lighting here.
Keep stepping up the game. I like it.
Our game is stepping up. So this is a really cool update. This is a really cool video because in the last video, so Brent submitted an offer last week.
Yep.
And they accepted. They came back and accepted. So
We're close. We're getting there.
Well, put it this way. They gave us a counter, and if we accept, it's a deal. In the last video, we were talking about we got a counter back from our next possible deal that we're working on.
And now it's locked in.
And now it's locked in. Literally in under a week, we were talking about it. They sent it back. We sat down and thought about it. We negotiated terms, and we have it under contract. So to give you guys a quick little background and summary, we now have a 16,000 square foot project that we have to take from empty, and we have to fill it. We have to get tenants, get investors, talk to bankers.
Yeah, I mean, there's different phases to a project, right? One is negotiating the original deal. Now it's structuring the deal to ensure that it will work and be a financial opportunity for everyone moving forward. That's kind of, to me, the exciting part. Like, negotiation, you get to a certain point, and now we get to putting the deal together because it's all about the numbers. You know, you got to find the tenants that make sense. Got to make the numbers. Got to make sense to the tenants. The numbers got to make sense to the owners. The build out that you got to do has to make sense. You got to, and now you have to control those costs, right?
Yeah. So for this video, we thought it'd be cool is we're gonna have Will do an overlay of some basic numbers, and we're gonna show you guys what we're initially thinking, because this would be kind of fun if we could document our initial thoughts of how much we think it's gonna cost, where is it at. And then at the end of this project, we'll see if we're accurate or not. All right, so real quick, what we wanna do is we wanna break down some of the numbers for this as we're getting into the deal now that we have it under contract. So this is what we got. So purchase price, so $425, payments, was it 2453?
Monthly payments based on a 20-year amortization,
so
5.5% interest, and 15% down.
So what we did for this deal is we got a seller financing land contract, right? So we got 20-year amortization, we got 5.5 interest rate, and then we also got a 15% down, right? Which is pretty good.
Now, one thing that's kind of unique about this deal is we have a 10-year balloon, but a 5-year refinance, reassess the interest based on prime. So they're saying, hey, we got to reassess what the prime is. That means that industry average based on the Treasury, U.S. Treasury, and they want to be a couple points above that. So it's still very fair what they're explaining.
Yeah, so basically we got to pay off the rest of the loan in 10 years. In 5 years, we got to sit down at the table and we got to figure out what the interest rate's going to be, pay that for the next 5 years. So our monthly payment is going to change based off of that. Or another way that we could go is we can go traditional financing and we can go to a bank and we could just get a new loan and refinance and pay them off. So there's a lot of different options that we could do with it. So just about for the next 5 years, what we're looking at is about $2,453, and that's gonna be for what our payment's going to be. Now, looking at some other numbers of what we're thinking, Brent wants to add something. So those are the hard costs, right? So this is what we're thinking is we got about, I would say 15,000 square feet to rent out, right? About 1,000 square feet for common space. What we're trying to get is about $10 a square foot. Now, $10 a square foot is actually very competitive within the area that we're in right now, because if we're looking around Grand Rapids, especially downtown, Brent's ran numbers, I've ran numbers, we're looking at, you know, $20, $30 a square foot downtown. Now, some of those offices are a little nicer, they have nicer amenities. What we have is a big white box. You guys have seen it in the other video that we did when we did the walkthrough. So what we're thinking is, hey, we're gonna offer $10 a square foot, and what we're gonna do, we're gonna white box it. It's very cheap and very affordable. So look at in your local city and look up what commercial would be. I guarantee you'll see this is pretty affordable. So
for downtown.
For downtown, right? So what we're gonna do with this is we're gonna have $10 a square foot, and it's a white box. And the reason that we're going cheap is because we're gonna white box an area out, and we're gonna tell our tenants, we're gonna give you a very cheap rent, and you have to build out everything within it, right? So these are the numbers of the return we're looking for. So $10 a square foot, what we're looking at is, now we have about 15,000 square foot of rentable space, right? So we got, no mark there.
And to totally understand this is not a deal for any tenant. Some tenants, they want you to build the whole thing out. There may maybe be a corporate, type of tenant. This is more of an entrepreneurial upcoming tenant that's willing to put in a little bit of the equity and effort themselves for a space like this.
So what we're looking at, if we can get this at a full occupancy of about 15,000 square feet, we could possibly make per month about 12.5 thousand, or per year about 150,000. Now, if we take minus, 2,500? Something like that. So we're gonna, and with other costs, we're probably looking at we're looking about $9,000 to $10,000 a month, right? Coming back in. I was gonna say 8 to be even more conservative, but if you're looking at that, making $8,000 a month, if you get this at full occupancy, that's a pretty good deal, right?
So we got $8,000 coming in.
That's being
per
very
month.
conservative.
Then we times that by 12 for a year, which is 96,000.
I was right. I'm usually bad at math.
And then that is, the net income that we make a year, and then
So this
we
is
gotta
net.
figure out the cap rate, right?
So hold on, pause. Brent goes a little too fast. Let's pause and explain this for you guys. So what we're looking at is about 96,000 net profit. That's profit. Expenses, everything gone. Now what we're gonna do is we're gonna show you guys what a cap rate is. Now, the reason a cap rate's gonna be good is if we wanna potentially sell this property to other investors, we wanna get a cap rate that somebody will be looking for that's a good cap rate. And we'll show you how to calculate the cap rate, which by us calculating the cap rate is gonna show us the projected possible sale of what this property could be.
So you calculate the net operating income. That is how much income is coming out net after you calculate your expenses. So we have, since we're doing triple net, all the expenses are carried on to the tenant.
So bottom line, this is how much money we're gonna be making after everything.
So then you take that $96,000 and then you got to calculate the cap rate. And cap rates vary across the board. They go all anywhere from, in California, like prime real estate, 4% cap rates, up to 15% cap rates. 4% is a very conservative. Everyone wants that property. It's not going anywhere. It's gonna always make that money. Everyone wants to be in that
And the
space.
higher cap rate's a little riskier.
A little riskier. Right? I mean, this is a transitional area. It's huge risks. I mean, tenants could be coming and going. Maybe no one wants to live there.
All right, so now what Brent's gonna do is he's gonna show you how to calculate the cap rate. And again, the cap rate is gonna vary by investor. Different investors look for different things, right? They look for whatever cap rate's gonna fit their portfolio. What we're gonna try to do is look at comparable cap rates that might be good for a possible investor to buy this.
So right now, Grand Rapids is around the best, probably around 6% cap rate, and this is pretty conservative for prime locations. For this area, we want to be safe. I think
So what,
for a
10?
good investor, I say 9.
So we're gonna shoot for a 9% cap rate for this formula, and we're gonna try to see what we can sell this for.
So we're gonna do 9% cap rate. So all we're gonna do is we're just gonna do 96,000 divided by 0.09.
1,066,666.666 repeating. We'll say 1.1.
So that would be the goal, what we'd sell it for based on that cap rate.
So if we get a cap rate for that, now let's factor in again building out costs. We have a budget of maybe around 200,000, right? So let's say that we buy this for 425. Let's say we put in 200.
250,000 is our budget.
It just apparently went up 50,000. So 250, right? So 5, 7, 6. So 675. So about 675, right? And let's say we sell it in 5 years. So if we take 1.1 million minus the 675, again, we have the 200 into it, right? We could pull out around 400 possibly, right? Now you have to also factor the $96,000 that we're going to be making
For like 5
over the
years,
next 5 years, right? So that factors into the deal. So if you're looking at that, that's almost $100,000
About
times
$1
5 years.
million you make in 5 years.
It's almost $1 million you'll make in 5 years. Right now, you hold it on longer, you could potentially make more with that, right?
People play the lottery for 5 years and they don't even win.
Right, so it's a very, very safe bet, right? But it's not easy because the hard part has just started. So what we're gonna show you in this video is Will can't be shooting with us. He has to take off. So we have a bunch of meetings today with investors. We have a lot of meetings with bankers, and we have showings, right? And we have possible tenants, right? That we're gonna say, hey, you know, would you be interested possibly in this space? So what we're gonna do, we think, be kind of cool is we're gonna show you little clips throughout the day. We'll vlog style it on our phones. He'll do a little bit, I'll do a little bit, we'll do it together. We're about to part ways right now and make it happen. So this is the deal that we put together. Again, we're gonna
Divide
document this.
and conquer. That's something you need to learn.
That's right. So again, we're gonna document this and show you guys, right, from the purchase, negotiations, finding the right tenants, meeting with the architects. You're gonna see some really cool footage once it starts getting built out, and then once we have it up and running. And then in 5 years, we'll show you when we sell it.
Licensed professional.
There you go. Here you go, Bob. All right, guys, summary recap to the video. Will, we wish you were here. Hey, Will, we wish you were here. We met with all the investors. We met with the bankers. Brent's coming down the stairs.
And it's game time.
This is the mural. Hey, guys,
Full
game
done
time.
deal.
It's a done deal. It's a done deal. Hey, we'll see you guys in the next video. Go ahead and subscribe, and we'll paint you finger murals like this.
Thank you.